Welcome everyone, my name is Nina Dunn and today I'm joined by Jonathan Pullin, Head of Property Finance here at Barwon. Today we're here to talk about the Barwon First Mortgage Fund and discuss what's been happening in the last quarter. Welcome Jono.
Hi Nina, good to be here today.
So Jono, talk us through the performance of the Barwon First Mortgage Fund over the past quarter.
We've seen the returns steadily increase over the quarter. On an annualised basis, the quarterly return for the whole of fund performance was 8.3%, and for an investment-only basis, 8.5%. Further, we've achieved these returns by making first mortgage investments only, where the fund has no exposure to mezzanine debt or preference equity investments. And as many of our investors will know, at the current moment, we have near on no built form construction exposure in the fund.
That's great, Jono. So how's the fund positioned in the face of rising interest rates?
Since the RBA began raising interest rates, we set our facilities with floating rate mechanisms. This now sees the majority of our portfolio benefiting from these floating rates. So as the RBA has lifted rates, that's the reason why we've seen the increase in the performance of the fund. Further, what we've been able to do in a market where rates have been rising is set floor rates to our floating mechanisms. Now, in the instance the RBA was to reduce interest rates, this would see the performance of our portfolio slightly outperform.
Talk us through what are the type of loan opportunities you're currently seeing in the market?
Deal flow remains robust over the quarter, but the quality is varied. We're seeing a larger than normal flow of opportunities where there is a request to refinance out an existing loan. Quite often, however, we find that it is difficult for us to enter into this facility because the loan to value ratio is too high for the level of risk we're looking to match the fund with. Rather, we're preferring to fund, be it either property developers or existing property owners, into fresh acquisitions of property. Our rationale for this is that the valuation is obviously currently set in current market conditions, and we find a lot of the operators that are either acquiring sites or acquiring existing commercial property in the current market tend to be very well capitalised, and that's the type of borrower profile that we are looking to fund. Also, although opportunities are limited, we are actively pursuing residual stock opportunities. A great example of this is a facility that we've just secured. It's a residual stock loan over completed entitled land lots here in New South Wales, and we've taken a loan to value ratio on our facility of 45%. And we believe the returns we generate off that loan against the risk profile is a very good outcome for our fund.
Great, thanks Jono for your insights, and we hope you found that beneficial. Thank you for joining us today. If you'd like to find out more about the Barwon First Mortgage Fund or any of the opportunities that are taking place, please don't hesitate to contact Jonathan or anyone in the Barwon investment team. Thank you.